Have you ever heard of the law of Genti? It's a set of rules from Scandinavian culture, and the first one is, you are not to think you are anything special. It warns against elevating yourself above the group. This idea, this pressure to conform, exists everywhere, even in places you wouldn't expect. It's a powerful force that shapes our decisions, often without us even realizing it. In financial markets, this herd mentality can be particularly dangerous. When everyone is certain about the same thing, when consensus becomes absolute, that's often the moment you should be most careful. It's in these moments of universal agreement that the biggest mistakes are made. Warren Buffett once called Bitcoin rat poison squared. His partner, Charlie Munger, was even more direct, describing it as a venereal disease. These are some of the most successful investors in history, titans of finance, who built their fortunes on logic and discipline. Yet as they issued these dire warnings, the price of Bitcoin and the entire cryptocurrency market soared to unimaginable heights. On one side, you have decades of investment wisdom. On Theoter, a chart that seems to defy gravity. A digital gold rush, creating millionaires overnight. It's easy to dismiss the old guard as simply not getting it. But what if they see something that the crowd, in its excitement, is missing? It's 3 a.m. The world is asleep, but you're awake, staring at the glow of a screen. A price chart flickers, its green line climbing higher and higher. Your mind starts racing with the what-ifs. What if I had bought in last year? Last month? Even last week? That gnawing feeling is called fear of missing out, or FOMO. It's not just about money. It's a deep, primal instinct. For our ancestors, being left out of the group, missing out on a vital resource, could mean the difference between survival and death. Today, that same instinct is triggered by rising price charts. It whispers that everyone else is getting ahead, that the ship is sailing and you're being left on the shore. It's a powerful, almost irresistible, psychological pull. In the early 1700s, England was gripped by a frenzy over the South Sea Company. Shares skyrocketed, fueled by wild speculation and promises of exotic trade riches. Everyone was buying in, from aristocrats to shopkeepers. Among them was a man widely considered the greatest scientific mind in history, Sir Isaac Newton. He invested early and made a handsome profit. But as he watched his friends and the public continue to get rich, he couldn't resist. He jumped back in at the very peak of the market. The bubble burst soon after, and Newton lost a fortune, a sum equivalent to millions of dollars today. He later remarked, "I can calculate the motion of heavenly bodies, but not the madness of people." It's a humbling lesson. If a mind as brilliant as Newton's can be swept away by crowd hysteria, what chance do the rest of us have? Imagine you're in a room with a group of strangers. Suddenly, smoke starts to seep in from under the door. Your first instinct is to get up, to raise the alarm. But you look around. No one else is moving. They're just sitting there, calmly. What do you do? In a famous social experiment, most people did nothing. They hesitated, waiting for someone else to act. The presence of a calm, passive crowd completely suppressed their individual judgment and instinct for self. They trusted the group's inaction more than their own senses. This is the power of social proof. We look to others for cues on how to behave, especially in uncertain situations. But when everyone is looking to everyone else, the result can be a collective paralysis, a shared delusion where an obvious danger is ignored simply because no one else is panicking. This has happened before.